Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, and in this video we're gonna cover the weekly, daily and the 1 hour time frame. Starting with the weekly time frame, where your bullish conservative scenario is this 5-wave impulsive structure 1, 2, 3, 4, 5, where the common target for your wave 5 is between 80k and 130k. After a wave 5, which has to be a 5-wave impulsive structure, we're looking for a bigger rejection and a bigger range to form. And this is then also the main difference with the more bullish weekly scenario, where you are looking for a wave 1, 2, 1, 2, and then a much more explosive bigger wave 3, where as price moves up, you only want to have short sideways ranges, but then you consistently want to move towards the upside. You don't want to see a bigger range, you don't like to see a very big rejection. You want price to move up and then short range up, etc. till eventually you then get a green wave 4, quite similar in size compared to this wave 2. But by that time you create this wave 4, you preferably already pretty much exceeded the targets for your conservative wave 5. On the daily time frame, your most bullish scenario is a multi 1-2. So we have a triple 1-2 here on the chart, 1-2, 1-2, and then another 1-2. Look for continuation to the upside in a wave 3. Common target for 2 is the white box here, 66.2k, 62k, and the 382 is also still a target for a wave 2, a little bit less common, but a target nonetheless at 67.9k. Price, of course, hit the 382, so there is the potential for this wave 2 to be finished and look for continuation to the upside. But that would mean that locally on the 1 hour time frame, you need this move to the upside to be a 5-wave structure, 1, 2, 3, 4, 5, which basically means you need to at least take out this high one more time, because at the moment locally, this is a 3-wave structure. If price then moves to the downside, then we can count this as a flat ABC, finish wave 2 over here, and then look for price to move to the upside. The invalidation is 58.8k. Your second scenario is also still a bullish scenario, does have a bit lower probabilities, but it is a double 1-2 with a diagonal in the second wave 1. So here we then have a 1-2, bigger 1, bigger 2, continuation up. The reason why the probabilities are lower is because actually of this wave 4, the recent move to the downside. So here in a diagonal, you then have a 5, a 3, a 5, a 3, a 5 diagonal, impulse, correction, and then an impulse. And it is by far most common in a diagonal to have an overlapping wave 1 and wave 4. But that's not the case. Your wave 4 retraced, got quite close to the high of wave 1, but we did not overlap with the wave 1 price action. And that is something that is very uncommon in a diagonal. It is not an invalidation, but it is by far more common to have overlap between a wave 4 and a wave 1, which is not the case in this scenario. Now your invalidation is 80.8k because a wave 5 is not allowed to be longer than a wave 1 and 3, and then you look for a deeper retracement down in 2 and then continuation to the upside. On the weekly time frame, your bearish scenario is a sideways WXY. W finished, X finished, and you look for a flat structure in a wave Y, with the minimum target being 43.2k, but the more common target that would be expected would be around 30k. As on the weekly time frame, we are working on the log scale, and that is because price has pumped hundreds of percent, meaning log scale is preferred, and the log target for wave Y is at 30k. The flat that I was talking about in a wave Y on the weekly time frame is what you see here on the chart on the daily time frame. So a 3-wave A, 3-wave B, and then a 5-wave C, where wave C moves below the pivot of your wave A. The common target for B is the blue box here, 77.6k to 83.2k. Minimum target, however, has been reached, 74.6k. And if price moves to the upside and touches 89.1k, the probabilities for this scenario will significantly reduce. Now the challenge for this scenario is counting this move to the upside as a three-wave structure, most commonly a zigzag family structure. So you're either looking for a 5-3-5, but then your wave C is very long compared to A, or you have to go into WXYs and WXYXZs. Now WXYXZ is very rare, never preferred. You would then count W, X, Y, X, and then AZ, but very low probabilities for this to happen, which brings us to a WXY. Now one option of a WXY would be over here a W, X, and then this has to be a wave Y. The problem, however, that you encounter now is that price took out this high, and in a wave Y, this is your wave A, 5-wave structure, 1, 2, 3, 4, 5. This is your wave B, and your wave C has to be a 5-wave structure. So then you have a 1, 2, 3, 4, 5. But this move down and this move up cannot be nicely included in a single impulse to the upside here. So that means that if we want to count this as a WXY, we now have to move into A, B, C for a W. This is your X, and then this is another A, B, C in a wave Y. So that would be your bearish scenario here with a three-wave structure than in your wave B. It does at the moment still have lower probabilities though compared to your bullish scenarios, but we'll get to the probabilities at the end of this video. Now this is your 1 hour bullish scenario. So here we're looking for an impulse, 1, 2, 3, 4, and then a wave 5 to the upside. Currently volume is increasing here, which is what you like to see in a wave 3. We're then looking for a wave 4, which has to be a sideways corrective structure with the invalidation being 71.2K, the 0.618 taken from the low of 2 to the high of your wave 3. Now, preferably a wave 4 is a bit longer in time compared to your wave 2. So preferably we do like to see some sideways price action, corrective price action, and then a wave 5 to the upside in this scenario. The bearish scenario on the 1 hour time frame is a flat structure ABC, but as bearish as it sounds, it's actually still a bullish scenario because after your wave C, you're still looking for price to move to the upside and take out the high of your B. So your common target for B here is 75.2 to 76.2K. If price moves up to the 1.618 at 77.8K, probabilities go down. And what you're looking for here is a 5-wave impulsive structure to the downside, moving below the low of your wave A. Now in this particular scenario, you then look for a wave 1, 3-wave corrective structure in 2, and then continue towards the downside. If we then look at the CVD divergences, then all of the bullish CVD divergences that we had played out as price was moving to the upside, there was absorption of market shorts with limit long orders. That is what CVD shows. And that has now played out with price moving towards the upside. At the moment locally, you can see there is no bullish nor bearish CVD divergences. The range here at the moment is also very young. As you can see, not a lot has happened since we made the high. So we need to give time for price to range. And as I always say, and it's a great tip from an Elliott wave point of view that I always give as well, is if price moves very impulsively, the best thing that you can do is to wait for a range to form. The range will give you all the clarity that you need for new opportunities. You can check the price action, you can check Elliott wave counts, and also with regards to CVD, we need a range to see what new CVD divergences will come inside this structure. So yeah, wait a bit for a range to form. Now, of course, we have news yesterday and we had news overnight, and we're definitely not yet finished because there's still stuff happening in the US with regards to the presidential election. So, it's a volatile week, not even a volatile day or a certain hour. It's just a volatile week. So please trade safe, of course. But also here on Thursday, we have some more news. And on Friday, we also have some more high impact news. So just make sure in general this week that you manage your positions very, very safely, right? Have a good plan, have a good strategy, avoid emotional trading and gambling. And if this is too volatile for you or you feel too emotional, just stop trading for a week. Because if you are a trader, it doesn't matter if price is at 75k or at 60k, at 100k or 10k, because as a trader, being usually day trading, scalping, swing trading is already higher time frame, but there is enough opportunities at any time, right? Either this week, next week, in a month time, it doesn't really matter, but just make sure that you trade safe. And if you then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario, which is the conservative wave 5, or the double 1-2 moving in a 3. Primary at the moment would be the conservative 5, but depending on the structure to the upside, we will have a better idea of what's going to happen. And then on the number 2 spot, the bearish WXY. On the daily time frame, the bullish scenarios have a higher probability as well, the multi 1-2 and the diagonal. For the diagonal, however, you do like price to take out this local high once more before moving to the downside. For the multi 1-2, it actually doesn't matter, because for a multi 1-2, you would either be looking here for then potentially another 1-2, right? So that's your fourth 1-2, or you have a flat structure inside your wave 2, which then is your 3 wave A, 3 wave B, 5 wave C, and then later you go back up once again. And then on the number 2 spot, we have a bearish flat, which at the moment is a lower probability scenario. If we then look at the probabilities on the 1 hour time frame, then the 1 hour scenarios are actually very close in probabilities. Now price has moved to the upside. We didn't yet touch the 0.618 at 71.2k. So it is difficult to really give the highest probabilities to the bearish scenario, but one has to be very aware of that scenario. From a trading point of view, what I write over here is a lot more relevant. So the 1 hour scenarios are very close in probabilities, right? In both of the 1 hour scenarios, you're actually looking for a range / a retracement. In the bullish scenario, you look for a wave of 4, which is then preferably a bigger sideways ranging structure, right? And in the bearish scenario, you're looking for then a wave 2 and eventually a move down, which can also lead to a sideways ranging structure, right? Now, after last night's price action, the move here to the upside from an Elliott wave point of view, and I say this very often on my channel, after very impulsive moves, it is very good to have patience and wait for a range to form, right? The range will give you all the clarity that you need. The main opportunity was when price hit support. If you would go back to my analysis on Monday, the live stream, which was done over here, the probabilities were higher for price to take out this low, to hit the support area, which I identified as a main area of interest, looking for signs of strength, bullish CVDs as price is moving up, and now we're here, right? Now that was a great opportunity, right? Up here, we have to wait for a range to form, right? That will give us the information. Also, a little bit of a side note, but news-related moves also have a bit of a tendency to be filled again afterwards. It is something that you regularly see where price moves either quickly to the up or quickly to the downside because there's some news involvement, and then at a later stage you might give back that whole move. So it's at least something that I keep in mind, right? I don't have a set amount of probabilities for that to happen, but I do realize based on my experience over the past years that there is an opportunity for price to come back and fill that news related move. Now on the 5-minute time frame, this move over here, right? I rarely ever go to a 5-minute time frame because I deem it not very useful, especially in my trading. So I don't like to count this in a lot of detail. I also don't like to go to a 3-minute or 5-minute, but on a 5-minute time frame, when you just look at the structure, it's quite a steep structure to the downside. As you can see, highest amount of volume is over here. So there's definitely the potential to count this as a 1, 2, 3, 4, a 5 wave structure, meaning an impulse, right? So what I write here is on a 5-minute time frame, there is at least the potential for an impulse down since the high was made over here, which is relevant for both a wave 4 because you can look for a zigzag family structure like an ABC, but also, of course, it is relevant for the 1-hour bearish scenario where you're looking for a bigger wave C to the downside, where this is then a wave 1, you look for 2 and eventually a 3 to the downside. So basically, this move down also makes the wait for a range to form and the patience tips even more relevant. So that is also basically what I'm going to be doing today. Again, it's a very news heavy week, which means that I usually trim down my trading. I explained over the past 2 days that I am not interested in, or at least yesterday, not interested in having new positions just before the presidential election. I'm happy in the position that I got from my initial plan. Wasn't interested in anything new because of the expected volatility, and I still share my opinion of yesterday, where at the moment I'm just waiting for a range to form. It will give me more clarity, and then I can always act based on this. Make sure you have your plan, your strategy ready, that whenever you see what you want to see, you can enter. But just please make sure that you trade safe. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.